Hello everyone, welcome back to my YouTube channel. Most of the banks don't collapse because the market is crashing alone. Okay, sometimes a single employee mistake can cost the whole reputation, all system failure, or the whole collapse of the bank. It's very important to understand that concept, and that concept which tells about all of this, that is operational risk. So today we are going to touch upon the operational risk aspect of the whole banking system. So basically there are three main components which are defined as a risk, right? So number one is the credit risk, which I have been covering in so many videos. So if you're new to the channel, you can explore that. Second is market risk, where there are so many factors from markets is involved basically, and like there is a trading within two banks which they are doing, right? So there is a market factor, right? How the market is fluctuating, what are the share prices and all that. So that is part of the market risk. Now this is the third type of risk, is operational risk. So basically operational risk is not about stock pricing going up and down only. It is about failure inside the organization. It can be any operational failure within the organization. So basically all the FRM students should remember this thing very clearly. Even if you are not directly just preparing for FRM, if you are an analyst in operational risk side, you should know all these things like people, process, system, and external events. So all of this is very important. So today we are going to touch upon all these things which are highlighted in yellow specifically, and we'll go step by step. So this is one of the document which I have prepared as per whatever the questions they are asking in the FRM exam, and also which are being used, the concept which are being used in daily life in the bank. So I have consolidated all of them together and I have tried to bring it up in this document. So this document also I will share with all of you, so you can download it from the description box. I'll give the link. Okay, now let's get started quickly. So first of all, what is operational risk? Okay, so operational risk means company or bank loses money because something inside the organization has failed. These failure can happen due to the person. It can happen due to internal process failure. It can happen because of any system failure or an external event. So in simple language, if I say operational risk is the risk that daily operations of business may go wrong or create a financial loss. Now let me give you one example to simplify this. For example, I am working in a team where I am preparing daily sales data. Okay, now I need to report this daily sales in a dashboard using Tableau or Power BI. Now, as per my daily reporting, there are multiple inputs which are coming to me. Now, what I have done as a mistake, so I'm the employee of the bank, I did one mistake, that I did not downloaded the latest input, or I mistakenly have used a older input. Now, when I'm reporting that in my file, okay, in the Tableau dashboard, and who's the end consumer of that Tableau dashboard is the finance team. Now the finance team is reporting this to any senior leader. Now what will happen? Because of my mistake, I used an old file. They will report some older number to the leadership of the bank. Now what will happen? If there is an amount that need to be disbursed on the basis of this particular file which I was preparing, that amount will get disbursed wrongly. So let's say 1 lakh need to be disbursed, but because of the older data, only 80,000 has been disbursed. Now that person will sue the bank, right? Whom we are crediting this money. That is case 1. What is case 2? We need to disburse only 1 lakh rupees, and because of the old file, we have disbursed 1 lakh 10,000. Now that person has already got 1 lakh 10,000. So 10,000 extra that person has got, and he has withdrawn the money. Now what you'll do as a bank? Nothing you can do at that point of time. If the amount has been already taken out from the bank, then what you can do, show that extra 10,000 as an operational risk in your books. So that is one of the example of the operational risk aspect which I have seen in my career. Okay. So Basel says the risk of loss resulting from inadequate and failed internal process or people or system or any external event. Okay, that is known as an operational risk. So this includes like legal risk, cyber risk, and fraud. And this excludes, this is one thing you should remember in your exam, that it does not include the strategy risk or the reputational risk. Okay, so operational risk exclude both these factors. Now, second question which comes up is why operational risk is important. So modern banks, like all the big banks like JPMC, all the Wells and Citi, all of them. So modern bank and company depend heavily on their employee because employee is the first pillar in the company. Then the technology which they are using in the bank, let's say SAS, Python, Tableau, Power BI, or any Excel based template, anything technology. Then process, there are internal process. Let's say you are pulling the data from a schema. On the back end of the schema there is a data lake, so all of those are part of the process. Then the vendors, there are vendor of the bank who are providing any services or maybe providing any tool to the bank. There also there is a linkage, right? So then there is a digital system. So all of those are very heavily involved when there is a operational risk is happening. Any aspect can be there. Okay, so if any of these fails, operational stop and losses occurs to the bank. This is why operational risk became one of the most important risk category in bank. So there are three risks. Let me just summarize a little bit. So number one is credit risk. You will get the highest number of job in credit risk. Number two, market risk. Number three, operational risk. In India, at least, I can guarantee for sure. Okay. Now, next thing, why does operational risk arise? So basically there are certain main scenario, there are main conditions, or there are some causes which happen very frequently, like human error. Like for example, what is the meaning of human error? Employee make mistake during daily operation. Like I downloaded the older version of the file. Then second is process failure, weak or missing procedure. Let's say there was a step which has been missed in the process. So that is a process failure. Then system failure, technology system stops. Let's say you had purchased a server for Python. That server has stopped working and now you cannot produce the report. So there are always chances of that. Okay. Then external event like natural disaster or cyber attack which disrupt the business activity. That is also very often. Sometime you might have heard this is a very common thing, like they are asking for ransom. We have hacked your system and all that, right? So that is the external event. Then the fraud, like intentional dishonest activity by the internal bank employee. That is also there, right? You might have heard of cases around that. Then there is a vendor failure cause. What is the meaning of vendor failure? Third party service provider fails to deliver the service. For example, you're buying a license of Amazon Web Services and because of so and so reason, let's say Iran had some issue with the US and then they hit the server warehouse in US with maybe a operational missile or whatever they were saying, right? So in that case, now that particular data center will not be able to function, right? So this kind of thing also can happen. Now the vendor has failed to provide the services, although they will figure it out, they will solve the issue, but this is one of the example of this vendor failure. Now, what are the type of operational risk? This is again very important, very interesting question. What are the types? Because risk has certain type. Now, this operational risk also have some certain types. So, as per the Basel Committee, the main banking supervision committee has given 7 major events which are called the types of operational risk. So number one is your internal fraud. So fraud committed by the employee within the organization. Example, rogue trading. What is rogue trading? An employee takes unauthorized trading positions to hide losses or the employee generates illegal profit by investing huge amount in any particular share or anything, any asset. That is known as a rogue trading. This is again a very important concept. You should know what is rogue trading. Okay. Then employee theft, like staff members steal company funds, asset or any sensitive information and sell it. The third example can be like intentional misreporting, like employee manipulate the financials and the numbers which are getting reported overall, right? So that is the first type of the operational risk. Second is the external fraud. What is external fraud? Like fraud committed by the outsider. Example is hacking, when cyber attack is happening. Then credit card fraudsters call you, they take your OTP, all of that is part of that. Then phishing attack, like fake emails. Websites are used to steal your information because you are storing your information on some of the websites. So this is the second type. Then third is employee practice and workplace safety. What does that mean? Like the operational loss related to employee and workplace issues. That is known as the employee practice and workplace safety. So example can be like any discriminatory lawsuit, like employees sue the unfair treatment because of any, let's say, language issue. Let's say in Karnataka and Maharashtra, you might have heard some issues. So that is part of this. Then wrongful termination. So illegal dismissal of any employee. Then third is workplace accidents, like employees suffer injury due to unsafe condition, maybe some fall, like the fall of ceiling happens, something like that. Okay. Then fourth type is client products and business practice, failure to meet professional responsibility. Example will be mis-selling financial product, or what does that mean? Like, so it means that unsuitable product sold to the customer. Then second is failure to act in client's best interest. That is again one of the example. Then third is regulatory fines. So there are penalty imposed on the banks for violating some regulatory guidelines. So in that case also you will have an operational loss. Then fifth type is damage of physical asset, loss due to physical destruction. Okay, earthquake, fires, terror attack, all of them are self-explanatory. Then sixth is business disruption and system failure, like anything related to the technology failure is again an operational risk, like server down, as I give the example already, or payment system crash, or IT outrage. So that can be very common, very, very common. Then the seventh type and the last type is execution, delivery, and process management. So basically error during any transactional execution and operation. Example includes data entry mistake by the data operator. Then settlement failure, any transaction fail to complete within the period of time. Then documentation error, like incorrect paperwork create compliance issue which result in a operational loss. So these are the type of operational losses. Then let me talk about a real world operational risk example, which will give you a clear picture that how this whole picture is functioning, basically this pipeline is working. So Bering Bank, which was a very big bank, collapsed in 1995. You know why? Because the trader Nick Leeson caused losses of 1.3 billion US dollar through unauthorized derivative trading and weak internal control. Nobody could catch him. That was one of the reasons. The other two examples also I have given, like the very famous one is the Societe Generale 2008 financial crisis. You can read about this also. Then Wells Fargo fake account scandal. So these are the real world example which you should know, because when you'll go for your FRM exam, so these kind of scenario can be given to you and you will remember this only if you have focused in this particular video. So I would encourage all of you to remember all of this. Now let's move on to the next thing, that is when was operational risk officially identified, because earlier there was no operational risk in the older generations. Now operational risk became formally recognized after major bank losses in 1990s and key milestones. So after Basel 2, like Basel 1 was also one model, then in 2004 when Basel 2 officially introduced operational risk. So basically you can say operational risk was officially documented in 2004. Okay, simple. So before Basel 2, bank mainly focused only on credit risk and market risk. After Basel 2, operational risk became the third major risk category within any bank, and bank are very passionate about monitoring all this now. In 2026, it's very important. Next topic let's talk about like Basel Committee guidelines on operational risk. So Basel Committee says on banking supervision, basically they created global standard to improve banking stability. That's what the overall objective was, because the objective is here that we should be able to safeguard any operational risk. So banks should be very much attentive for all these people, system, and all of those things which are like very much now regulated. Now let's talk about best approaches for operational risk capital. So there are certain approaches which bank use to calculate that capital. So first approach is basic indicate approach. So capital charges is calculated using a fixed percentage of average gross income. That is step one. Second is standardized approach. In that, different business line use different beta factors for capital calculations. So if you want to understand in depth, you can put a comment. I will go topic by topic. But in this video, the focus is to make you understand the overall operational risk. We can talk about it in details if you guys want to do that. I'll go on that way. Third is the advanced measured approach, AMA. Bank use internal statistical model and historical loss data to predict the operational loss. Okay. Then Basel 3 and final Basel reform, which is the current one which is going on in market, that's Basel 3. So Basel committee later replaced older approach with standardized measure approach. So SMA approach basically combine business indicator component and internal loss multiplier. This is again very important because this change only came after Basel 3. So now let's talk about the next thing, that is how do bank handle operational risk, because this is something is inevitable. There are system failure, people failure, so many things happen. So bank need to handle this. Now how bank do that? So basically first step, risk identification. Obviously bank identify risk using the risk assessment, audit, internal reporting, and process review. So these are the first identification, first step. Second step is risk assessment. How big is the risk? We need to assess that. So bank measure the probability. What are the probability of the occurrence? How much percentage the operational risk will happen? What are the probability? Eventually you all understand the probability factor now. Okay. Then severity of impact. How big is the impact? And what are the tool which bank is using? For that risk assessment, risk control, self-assessment, internal, or they are drawing some heat maps to understand that, then some scenario analysis, sensitivity analysis, so many things bank is doing for that. Next approach is risk monitoring. Basically in this, bank monitor the key risk indicators, the column, the most important column related to the all the portfolio which they have, like loss databases they monitor very closely, then control testing. Then risk mitigation is the next thing which bank do, because they have assessed this, now they are monitoring, so now the mitigation part comes. So bank reduce risk using strong internal control, and then so many other things, like they follow the cyber security, staff training, disaster recovery planning, and all of that. Then the another step is business continuity planning, BCP. So ensure operational risk should not arise, because if operations are continuously running during the crisis period also, and we do have the recovery procedure, we do have the backup system, so in that case bank don't need to be worried about the operational loss much. Okay, now there are 3 lines of defense, obviously, which bank always function. So first line is the developers, basically business unit manage daily risk. They are the developers, they are checking the risk on daily basis. Second line is the model validation team. So risk management and compliance team provide oversight. That is your model risk management team usually in the banks. Then third line is internal audit provider. There are a dedicated audit team which function only to catch their operational losses in the bank, so that it should not happen. Then now key FRM exam concepts. Difference between, you should know that, okay, you should definitely focus on all this. So difference between risk, credit risk, market risk, operational risk, and liquidity risk. So you read that thoroughly, you should understand that. If you want me to make an individual video on all of them, I'll do that, okay, but there are already video on my channel about credit risk much more in detail, so you can go through that also. Now important FRM keywords, just focus on these keywords and Google them. RCSA, KRIs, KCI, scenario analysis, operational loss database, near miss event, tail risk, model risk, conduct risk, cyber risk, business continuity planning, stress testing. There are so many good videos I have made on some of the topics, so you should go and revise on them. Then quick revision summary, let's focus on this. So operational risk is the risk arise from people, process, system, or external event. Simple. Everybody understood? I think this is clear. Now 7 Basel event type we already spoke about. Then Basel timelines we spoke about. Let me give you a bonus thing. That is your interview questions which can come to you. Now let's talk about that and then we'll wrap up this video. So what is operational risk? You should put a comment. What is your understanding? I'll not read it for you. I'll not make you understand any more on this. I think you should reply to me if you have any better opinion, how to draft the definition of operational risk. You should tell me that. What is operational risk? Difficult to measure. Why it's difficult to measure? That's what I mean. So because operational losses are often very low frequency compared to the credit or market risk. So that's why. And what is SMA? This question can be for sure asked to you in your interviews also. Okay. Now you should focus on this document which I have, and all of you can download this document from the description box. Make sure you do that. And if you want me to make any individual video on some of the topics, I'll do that for you. I hope this make you understand operational risk much more in detail, because there are very less number of people are working in this domain. So I try to cover all what you should be using on day-to-day basis in your job, right? So obviously I'll make detailed video. If you guys want me to do on any particular single topic, I'll do that. Now on that note, if you like this video, you like my effort, please subscribe to my channel, please hit the like button, and please put your comment. What are your thoughts overall on this video? Thank you so much. All the best.